All right. We are live, everybody. What's going on? My name is Amal. I got Faisal here on the call with me as well. Today, we're going to discuss US stock market only, but we wanted to share some news with you guys. We partnered with one of our friends, Rex, and he's actually doing our content in Dutch. So if you're watching from the Netherlands, make sure you check out this channel right here, Alpha Trades NL, and he's going to be doing Dutch translations of our crypto analysis. And he also has a crypto tip jar, so make sure you guys tip him, all right, and leave him some comments and some thumbs up, okay? So let's dive right in. Faisal, what's going on?
Not much, man. Great to be here. It was actually kind of a crazy day today.
Yeah, I mean, let's dive into it, man. S&P 500, 2 down days so far. Seems very odd given that, most down days get bought back up pretty fast. I mean, what's your thought process right now?
Yeah, I think, there's this whole narrative about whether or not we are actually going to have this imminent rotation into value from growth. So basically what we've been seeing for the past week or so, excluding today actually, is as tech has pulled back, you've seen a lot of these sectors that were, if you guys have followed my Discord, I kind of named these sectors like the industrials, energy, financials, the value sectors that have really not performed to the same level as tech. They've actually seen a lot of short-term momentum as tech has pulled back. So
Faisal, for our viewers, first of all, can you distinguish between value versus tech? And can you give me some tickers to look at for value versus tech so our users can see?
yeah. So basically, when I say value versus tech, I'm speaking in terms of, well, actually, when I say tech, y'all already know what I mean. That's a sector. But value is pretty much a group of sectors that are basically have not performed to the same extent that tech has for obvious reasons. But I think they're still fundamentally cheap compared to if especially if you're thinking that the economy is in a V-shaped recovery, which in some data points, as we've mentioned before, it does indicate that. Whether or not it's actually that strong of a V-shaped recovery is another thing. But these value sectors, energy, industrials, what else was there? Financials, housing used to be a value sector before it nearly went all the way up. Let me give you some tickers. XLF is for financials. XLI is for industrials, XLE is for energy, and then ITB is for housing. A lot of these sectors were primarily depreciated as tech was going up, at least earlier in the quarter. And now, basically, in the past week or 2 weeks, as tech has come down, you've really seen the momentum start to come into these names. Not as much as I thought it would, but it's definitely outperformed tech, at least for the past 2 weeks. But today, oh, and I'm sorry, I forgot the biggest value sector. Well, it's not really a sector, but it's a stock group. The small cap index could probably be associated with me talking about the value sectors. But anyways,
And you mean small caps with an ETF like IWM?
perfect. Yeah, that's exactly what I watch for my read on small caps. But today was very different. So if you had seen yesterday, small caps were actually up for the day, slightly up, whereas tech had that massive sell-off. You had some sectors like financials close to the upside. You had industrials perform really well yesterday. All these things kind of fit into the narrative that as tech was going to pull back, money was being taken out of these extended high growth assets, or even if they weren't high growth, just the extended assets like Apple, for instance, is not a high growth stock, but it's very extended. Money was being taken out of there and being put into various names in the financial sector. So, or I'm sorry, not financial sector, the value stock group. So stocks like J.P. Morgan, I'm in 3M. What's another good one? Caterpillar. Um, Pulte was one that reported really well yesterday, but had been a value stock before it had jumped 10% on earnings. Money was being moved out of tech and into these stocks. And today was very interesting because this was the first day that I think really bucked that trend. So we opened the day very negative. on all bases. I think, except for small caps actually opened up for the day. And then as the day progressed, you started to see tech being bought at a pretty nice level towards the bottom. And you saw high growth stocks like Datadog and what was another one? AYX, Alteryx. They actually closed up for the day, I think. And you had sectors like the financial sector, the industrial sector, and the energy sector. They actually closed down for the day, which was really interesting because they actually opened up. And I think by the end of the day, small caps, while they did open up, they actually closed worse than tech, despite all the negativity that we got from yesterday and in the pre-market today. So that negative momentum did not carry over throughout the rest of the day, and it actually translated into these value sectors selling off, which was really, really interesting considering you would think that because of how bad yesterday was and how much support levels we broke, that momentum would kind of continue, and you wouldn't see this type of buying towards at these levels. But that's exactly what happened. And if you guys saw my post very early in the morning, I started to see some stability in Microsoft. Now, Apple was down, I want to say like 3% in the pre-market, but Microsoft was actually only down 1%. And it was really holding a key level of mine where I was like, okay, usually Apple and Microsoft, when they go down in the pre-market, they usually kind of mirror each other. But Microsoft was really going to be the focus of today because they had just reported earnings yesterday or 2 days ago. I forgot. And so I was really paying attention to how they were going to play Microsoft because that had been the stock that had already gotten the earnings out of the way. And now it's really still like, even though after the earnings that's considered the reaction, I wanted to see how it closed out and gave me a weekly reaction, and so far it really held strong. And so in the pre-market, I actually, or I'm sorry, like within the first 10 minutes, I actually covered my XLK short, thinking, the fear was a little bit too high in these tech sectors, or in these tech industries, and I was seeing some stability in the leaders like Microsoft. And so I covered it, and it ended up being a pretty good trade. And I had no idea that tech was going to be bought up the way it did towards the beginning of the day. It kind of teetered off towards the end, but still, nonetheless, I thought the momentum would be a little bit more flat, versus it was actually pretty nice today considering where they opened. So, for the crowd that really thinks, and I'm one of those people too, like if you look at my portfolio, or all the alerts that I have, I'm pretty much in a lot of these value names in the industrial sector. I'm in some value names in the healthcare sector, like Medtronic, I think is a very good value at this price. So I'm really in that whole narrative that I'm not trying to buy high growth right now. I'm really trying to invest in value in different areas. But so far, I'm feeling a little nervous because it seems like tech does not want to go down. Like this
Yeah.
pullback that we got from Nasdaq, I think it's down maybe from the high 2 weeks ago to the low of today. It was maybe down 700 to 800 points, and that may not seem that much because the Nasdaq goes up so much, week by week. But I think that may end up being the extent of the pullback that we'll get. I really expect tech to maybe consolidate to throughout this maybe like month or so. And probably we'll get more clarity later on, but I really don't think we're going to get significant selling next week as a lot of people think.
You
And
know, just to chime in, I think what's really interesting is we discussed this last week about how the Fed has sort of, gone gung ho, and they started buying bonds of companies that don't really even need to, be as part of their quote unquote portfolio. Going into Amazon and Apple and Microsoft, I feel like this is giving any asset managers that signal like it doesn't matter what happens, the Fed has your back, especially now that tech is the one place that, money can reside without, extend coronavirus fears. It's you basically have a green light, perpetually until things, really go bad. So I guess, maybe the buy the strength in tech could very well be driven, by this whole idea that maybe the asset managers are looking at the Fed like, okay, first of all, these guys are going to print, unlimited amounts of stimulus and QE. They're buying, investment grade bonds. They're buying bonds into Apple, Amazon, Microsoft. So what other bigger bullish signal, I guess, do people need other than the fact that the Fed is literally just buying everything in tech?
Well, like I would normally agree with that. Like for some instances with a stock like AT&T, ticker T, the Fed has been buying a lot of their bonds too, but that stock really hasn't done anything either. But the clarity that we got from Microsoft was, look, their business is absolutely not being affected by Corona at all. In fact, you could say it's even being enhanced by it. The demand for their services has increased. So money managers have definitely picked, if you were on the Microsoft train, I'm sure a lot of the people who were on there really thought that they were going to beat this virus, and they have. And so that's given enough reason to push the stock from, where it was at in the lows in March to where it was at before the earnings. Now, I remember before the earnings came out, I just can't remember what day it was, Wednesday, I think. So on Tuesday, I told people to expect record earnings from Microsoft, record revenue, earnings, whatever, but to also expect the reaction to be negative. And that was primarily because of where tech was set up and how much, like, usually when these earnings happen, when the stock is at an all-time high like this, there's only so much it can go up, even if it produces record earnings. So they really had to surprise on an enormous level for the stock to actually go up, which is why, they ended up beating at a really nice level, but it wasn't enormous. And that's why the
Mhm.
stock ended up going down. But to answer your point about, whether or not money managers are just looking at the Fed and buying what the Fed is buying, it's kind of a mixed signal. It's just like like I said, AT&T is not trading at all-time highs. It's still kind of way below its.
Let me unpack that a little bit, because I know our viewers are probably wondering exactly why AT&T is not going up. So I think my caveat to the AT&T situation versus, say, Microsoft, Apple, Amazon, at present moment, I think we know very well from the last year and a half, 2 years, how badly AT&T was run, right? Especially the CEO having that huge, not scandal, but rather he basically did not really do the company, a whole lot of favors with his leadership. And in fact, when was he leaving, or did AT&T hired a new CEO when? Last year?
Let me check.
Last year or 2 years ago. Well, point is, there's like huge bonuses paid out to some of these executives, especially the CEO, while the company really hadn't done anything. So, yes, I understand that AT&T has, the Fed to buy up some of its bonds because, I mean, it is, one of those cornerstone companies, especially in telecom. But when you compare AT&T as a company run in terms of management and potential, innovation for the future, I don't think it's anywhere close to, say, something like Microsoft or Apple or Amazon. I mean, these are, key leaders in their own respective segments with huge, huge, cash savings. Like they literally have unlimited amounts of money that they can survive and weather pretty much any storm. So I do agree with you that yes, none of these companies should have really gotten the money, and we don't really know why. But AT&T getting the money, or rather, having the Fed intervene and buy some of their bonds, I wouldn't really say that is comparable to something like the Fed buying bonds of Amazon and Apple, because that's like putting Amazon, Apple, and Microsoft, on steroids with the Fed already, buying their bonds.
Yeah, I mean, see, for me, like when I hear that the Fed buys Microsoft or Apple or something like that, it just means they have a higher floor. Like when the stock does end up selling off, it's not going to pull back 10 or 20%. It's really going to have an insanely large floor. Not so much as a driving force to be bought at high levels. I think that in turn ties back to the fact that they're producing record revenue growth, earnings growth, and they're seeing growth just all over the place. I'm
Yeah,
just really surprised that AT&T, like exactly what you said, even though it's kind of a mismanaged company, they're still going to be at the forefront of American 5G. They still have a lot of growth ahead of them. And the fact that, with the Fed buying their bonds, essentially, that should raise their floor. That stock has not seen any traction whatsoever. Like it would be something if the stock was, like trading at $34, 35, then I could say, okay, it's primarily being lifted because the Fed is buying it, and that's creating the safety net. But the fact that the stock literally has done, I mean, it bottomed out at $26, and kind of stayed between 26, like within the week that everything sold off and collapsed, it went from $31 to $26, and it's still like at $30. Like it's really traded sideways for the entire quarter. So it's really
Yeah.
interesting to me, just like if the Fed buying the bonds is providing a floor, it's really not providing a driving force for these assets. So like that.
So, sorry to
No, go
interject.
ahead.
I was just going to say, yes, I completely agree with you. I think um, I don't think the Fed buying bonds necessarily pressures a stock up. It does, definitely create a floor. However, in the current environment that we're in right now, it seems like, when the Fed is stepping in and it's kind of showing you more aggressive movements towards a stock or towards a particular market, say like the LQD or HYG, bond purchases that the Fed was doing,
Mhm.
it's almost like a signal for asset managers, I would say, that, okay, well, we need to put our money somewhere. We know that maybe for the last quarter or two, they may not have performed so well. They got some money sidelined. They also know that tech has been one of the best performing, subsectors in pretty much the entire U.S. stock market, and it just keeps hitting all-time highs after all-time highs. And so, if I was going to put my money into anything as an asset manager, shit, I would definitely pick Apple over AT&T, because Apple has literally, $185 billion in cash and solid management, and it could probably easily survive coronavirus storm, and it could do many other things. Can AT&T do that from the simple standpoint of just, growth and innovation at present moment? I don't think so.
Yeah, I definitely agree with that.
Okay. Let's kind of move on. So, Apple and Facebook reporting next week. Thoughts on that?
Yeah, I think it's once again, I'm not going to play them just for one, especially after we've seen so many negative reactions to companies that produce pretty good earnings reports. I know Texas Instruments put out a fairly good earnings report. I mean, it wasn't bad, it wasn't great, but it was good. And I thought the stock should have traded up, and it's actually gone down since that report. But and then same thing with Microsoft, negative reaction, or great report, negative reaction. Tesla, um, good report, negative reaction. So once again, I'm not really going to comment on whether or not they're going to beat or not. And I actually think Apple has already told us that they're not going to. They're not going to do well. I don't know how low the expectations are, but Apple has already come out and said we are not. They've already closed all their stores. They're probably going to not have record sales like Microsoft. But I wouldn't doubt that even if Apple produces a bad report, their reaction could still be up, because this market is wonky, and it's primarily just driven by the feel of what if tech is overbought or tech is oversold. In regards to Facebook, though, I think Facebook is a company that still has a little bit more room to climb. I think. Where is Facebook at? Facebook really has not done that much since actually March of 2018. So March of 2018, this stock had hit an all-time high of $218. And back then, the company was making around $7.57 a share. This year, they're expected to make somewhere close to $7.38 a share, and the revenue growth has teetered off a little bit. But then again, they're in a lot more early high growth ventures, and I think those areas still have more room to pay off. Like their revenue or their earnings growth is really going to accelerate in 2021. They're going to make record earnings, or they're expected to make record EPS of $9.76 share, which is a 32% growth from this year, which is really, really great considering they're growing 15% this year and then 32% next year. And the stock has still really not done much for 2 years. It's kind of flatlined a little bit. So I think there is a lot of, there's a room for upside for that stock, in my opinion. I don't think it's gotten too ahead of itself, even though you had that fantastic run that it had from the low of March to now.
Yeah, I mean, I think it's up almost, what is it? Almost 100%, I think. It went up to a high of like 83%. Now it's currently at 68%.
Yeah. Yeah, I mean, I'm definitely a bull on Facebook. I think Facebook still has really good products. I think they've really managed to increase the monetization of Instagram, which I think, if especially if TikTok gets banned in the U.S. or it's being banned in multiple countries, I really think Instagram is a beneficiary of that. And the fact that they're able to now create it, or I'm sorry, add a sort of marketplace to Instagram that was totally different than 2018. um, I think it's going to be a very interesting thing to see how it plays out, and I think you'll see the direct results come this quarter um, on that kind of e-commerce Instagram merger. So I'm really looking forward to it. Once again, I'm not going to play this stock though, because once again, tech earnings, they could produce well, and the reaction could be bad because the mood in the market is we're going to sell high growth in tech, and there's nothing you can do about it.
Yeah.
It's that it'll just perform bad. But I mean, the bounce back will be fast, but the initial reaction will be bad.
Yeah, fair point. Um, a couple of positions I want to discuss, with some of our free members who are watching right now. Um, we had some pretty solid trades over the last couple of weeks. I held on to silver for a good month and a half. Uber, so I cut the rest of my Uber position. I think I had bought in at 29.30. I cut some right around when I was up like 12 or 13%. And then I just cut the rest of my position today because I just kind of saw Uber just chopping around this area,
Yeah.
not really showing me strength, to keep pushing up. So I said, you know what, it might be time to get out and take my profits and run. So cut out at Uber, silver too. We got into silver right around 1705. I mean, been a phenomenal trade so far. Close
Yeah.
out that position because I think for the near term, I think silver has really sort of gone parabolic, and I expect a pullback maybe towards like 18, maybe towards 17 or so. So I'm probably going to be looking to get back into silver, and I kind of expect the same from gold, where I do think gold has kind of moved up a lot. I expect gold to maybe push back towards like 1800, 1850 or something. Uh, but I do still think that these precious metals are going to be a big play for the remainder of 2020. I've said over and over again, and I think Fassel has as well. Personally, I don't see gold under $2,000 by the end of this year, maybe even 2250. But again, not financial advice. You guys do your own research. But I still have a small position in GLD, GDX, but I just closed out my silver because I know silver reacts very aggressively when gold moves up or down. So if gold pulls back 3%, silver is probably going to drop 6, right? So I'm careful about my silver position. And then finally, I wanted to sort of get your insight on this, Fassel. Intel, dropped
Damn.
insane amount. I mean, I just thought that this was like, it was a bit irrational to me because it wasn't like, there's a terrible news or terrible earnings. Yeah, it was bad. I get that, AMD and Nvidia are chipping away at Intel's market share, but it's not like Intel's dying tomorrow. And dropping 18, 19%, that was just a bit extreme to me. So I actually picked up Intel today, right around 50.83. So I want to get your
Damn.
thoughts on Intel.
Damn, you are a brave soul to try and catch that. Damn. Yeah, take a look at AMD real quick. For those who didn't keep an eye on what AMD did today as a result of Intel's miss. So basically, why Intel got killed is because they said they were going to delay their new generation of chips, which is very important for AMD, and why AMD saw 15% gain today is because AMD currently has the edge as far as processing power for CPUs, and or I'm sorry, yeah, CPUs, and that market share. I forgot how much AMD actually has of that market share, but it's very insignificant. I think it's like 15% of the market share, and Intel controls the rest, like 85%. So the fact that AMD will have this technological advantage for whoever knows how long, because Intel has said that they're going to delay their chips in data centers and CPUs, I believe. That's why AMD, people rush to buy AMD, because now they're going to have this window where they will be the top dog as far as technological innovation for just this time period. I don't know if it's going to continue, or when Intel does end up finally producing their new generation chips, whether or not it will be better than what AMD has. But that's a very significant uh, move in AMD, and I think it shows the fact that people really expect AMD to take huge amount of market share from Intel, at least for this period. And who knows, the staying power in CPU. I'm not like a CPU expert or anything, but if AMD manages to really capitalize on this moment where they have the technological lead, that could really shift things in the long run as far as the overall market share. So
I Yeah, I was gonna say I totally agree with you. I mean, I do think that AMD is the underdog that you want to bet on. And just for our viewers, Faisal, myself, and Austin had a very detailed discussion on Intel, AMD, and NVIDIA. I think maybe like a month and a half ago. I still have a small position in AMD, and to be honest, I'm a bigger fan of AMD than I am of Intel. One of the reasons was, Jim Keller, who's one of the guys, key engineers who left Intel just recently. He's still working as a consultant for them for the next 6 months, but he was one of the very integral parts, even in AMD days in 2011 and 12. So he like really helped propel that company. So seeing him, leave AMD, come to Intel now, and now leaving Intel was definitely, in my opinion, a big hit to Intel as a corporation. And especially seeing NVIDIA and AMD slowly kind of chipping away at Intel's market share, I do agree that you want to be betting on AMD. However, Intel still dominates a large swath of the market share in desktops, in gaming, in many other products that AMD is just now entering. So for me, it wasn't necessarily like I'm buying Intel for the next 5 years. I'm buying Intel because it dropped 20%, in 24 hours for, news and earnings that weren't really even that terrible. So for me, it was more so like a play on the exaggerated drop.
yeah, I think it was definitely overkill for sure. And the fact that it seemed like people just moved money out of Intel and into AMD. Like, I think how much Intel closed down 15% and AMD was up 15%. It was almost like a mirrored move.
Yeah.
But one other thing that was very interesting that I noticed was what exactly happened to the semi equipment makers. So Lam
Mm.
Research, Applied Materials, a lot of these stocks I've talked about as being a fan of, because I think they're, as long as the semi space continues to innovate and come out with these new chips, they're going to need even more intense material, or more intense equipment, and more equipment in general to make these chips. As factories increase, you have Foxconn, or I'm sorry, not Foxconn, Taiwan Semiconductor actually building a plant here in the US. These factories are going to increase, and the amount of equipment needed to make these semis is going to naturally increase as well. But you saw today, these stocks actually got killed. Lam Research and Applied Materials, both stocks that I'm pretty big fans of. Oh, and KLAC is another very good company. And I think that's in respective to exactly what Intel said. And the fact that they're going to be delaying chips, they're not going to be ordering new equipment. And so that's really bad for this sub industry. So for people who are still hot on semis like I am, usually I would say you could play the equipment makers and the semi chip makers at the same time. They're both going to go up. But now we may be at a bit of a crossroads, and I think it may be best to stay away from stocks like Lam and Applied Materials for the time being, until we get some more clarity on just how much production is going to happen within the semi industry. Because the results after today were really bad. I mean, I was fairly surprised. Like, I knew why they went down, but I can't believe they went down. Like, Applied Materials went down 4%, Lam was down, I don't know, 3% or something. And I just think that's something to keep an eye on, because if in fact that this is kind of overhyped, and it's not really as bad as people think, then these stocks will definitely be at really nice values. And you guys know that I've liked Applied Materials for a while. This drop here may create a buying opportunity if I see the right stuff, but once again, I would not be in these semi equipment names if I'm a semi fan, at least for now.
Yeah, I was gonna say, tech and semis. I mean, some of these stocks, like we saw some big gap downs and pretty, intense selling. Even if you look at volume, I mean, not to kind of ask you like, do you think this is the top? Because it's very hard to determine. But are you thinking that we're somewhat close to a top?
In terms of in the semi space.
No, just the market in general.
No, I actually don't. I think we may enter a period in tech that will be consolidation because, like I said, the earnings have really been. I mean, I guess we're going to see the rest of the earnings, but when you look at companies like Microsoft and Texas Instruments and even Intel reported a very good quarter. This quarter, the earnings have been good, and they've somewhat justified the fact that these stocks should move up a lot more than their peers that have either not been putting out guidance or have had terrible quarters. It makes sense from a relative investing perspective why these stocks are up so much, and the earnings I think back it up.
Yeah.
So I think we may enter in this period where valuations may start to come down a little bit as these stocks trade sideways for a little bit. Um, but I don't expect a massive pullback like everyone is thinking. I think consolidation is more likely than not, and that's frankly based on the fact that earnings have been good enough, in my opinion. Whether or not they're going to
Yeah.
be good next quarter, I think next quarter is still uncertain. But this quarter definitely, I think, justifies a lot of the moves.
Yeah, fair point. Um, Last point, I mean, I just kind of wanted to discuss. I talked about this last time. Um, I personally think that if we're not close to a top right now, I'm kind of with you that we might see a consolidation. But after that, I think the breakout that we might see might be the final blow off top, like straight up parabolic move. Because what I'm kind of seeing in the crypto market, what I'm seeing in the IPO space, what I'm seeing in the tech space right now, the tech stocks, really reminds me that the market is kind of priming for this huge sort of blow off top FOMO type event. And what better conditions than having a lot of money still sidelined due to fears, or the Fed pretty much providing that unlimited liquidity, right? You
Hmm.
can't have better conditions than that to have a generational blow off top, especially when that tech is really just taking off. So that's kind of my last stop. I'll let you kind of finish it off.
Yeah, I agree, and the fact that rates, like, when you look at the real economy and the state of the small businesses and everything like that, the one thing that comes to mind is the Fed is going to need to keep rates low for an extended period of time. And like I said before, that is just music to these big caps companies' ears because they're not having any problems, but now they can borrow at an even cheaper rate, like the cheapest rate in the past 5 years. And
Yeah.
so that's just going to provide them with enormous opportunities to make new growth avenues, and I think that'll end up fueling these assets higher. I don't know about a blow off top. I think what you say is logical. I think it could definitely happen, but I like I really think tech will consolidate. I think they've already gone up so much, and so I think if you're going to have a blow off top in the market, it will primarily be led by industries like the industrials, the housing sector, and maybe the energy sector. Especially if the global economy starts to pick back up again, I think energy will come back because it's still way too low in my opinion. I think a lot of these oil stocks are trading at um, just very very low valuations compared to where they were priced in mid-March when there was like a complete lockdown and no one was using oil, and there was that whole storage issue, and there was
Yeah.
just so much bad that it was before that I don't think is present now. I think you're going to see these sectors really come up a little bit. I don't think they're going to go to all-time highs or whatever, but they should definitely push this market maybe I don't want to say to the highs, but definitely close to the highs.
See, I think for me, reading about how the tech bubble was, or even witnessing and experiencing the crypto bubble, the characteristics of, first of all, I mean, obviously, the environment and criteria is pretty much set for an even exponential movement in asset prices, specifically in these sectors that are already overextended, which is, like we said, interest rates are low, Fed unlimited QE, and tech stocks are already up a lot. Asset managers or majority of hedge funds still are looking to potentially put in more money to the market. All these to me set up the perfect catalyst for a blow off top. Now, I'm going to kind of explain to you why I don't think other segments or other sectors are not going to move up. I think blow off tops psychologically have that FOMO kind of um, association, because everybody's trying to get into the hot thing. And the hot thing definitely ain't financials. It's not energy, right? It's not the typical value sectors. As you noted earlier, tech has seen the most aggressive style of movement to the upside that no other sector can even compare. So I'm thinking, why would other sectors now see money to catch up to something like tech, when tech already has so much money behind it, so much influence, especially the whole idea of coronavirus advantage? So that to me sets up like the perfect primer of tech again taking off, or say something like the new SPACs that are being introduced to the stock market, or the new IPOs that have already done so well, or the electric vehicle stocks. These are the stocks that would probably benefit from quote unquote the tech blow off top. But that's kind of my thought.
Yeah, I mean, I could definitely agree with that. The only reason why I say values should end up picking up, one, because I think they should be trading relatively higher than where they are now. They shouldn't be trading at all-time highs like tech for the reasons you said. They are not Corona advantage stocks. They are actually being hindered a lot more than these tech companies. But at
Yeah.
some point, I'm expecting people to take profit. Like that's my main thing. I really think profit taking will come soon because these tech stocks have had enormous runs. I mean, you look at a stock like COUP, which has been a software leader of mine for at least since the beginning of the year. I mean, that stock is up through the roof, and at some
Yeah.
point, like I'm thinking, y'all got to take profit, right? Like pretty soon, like at some point. And so once they do, I still think, just like I said before, the value sectors are trading way too low relative to where their earnings are going to be next year, especially if we have this a very good economic recovery. So that's just my take, but trying to guess profit taking is really, it's very tough. And honestly, it's better to not try and make decisions based on when you think profit taking is going to happen. But yeah, that's just my 2 cents. I think at some point, these stocks are just so overextended. The money managers that have bought these things up, like when Coop, they probably came into the market. I mean, they were probably FOMO these hedge fund managers at like 240 or something like that. They didn't get in at 180 or 165. They're probably going to take profit, and they've made a good amount of money. They've made 20% or 25, 30%. And so once that profit taking does happen, I expect money to not stay on the sidelines, but be moved into these other sectors, primarily because, interest rates will remain low. Maybe financials will not see the momentum, but industrials for sure and housing for sure. I think you will see those sectors rise significantly from where they are today.
Yeah, I agree with those thoughts too. Well, I'm gonna leave it at that. Um, Great having you on this call, and I hope people who are watching right now do enjoy our content. Make sure you guys hit the thumbs up, share our content to support us. And until
Oh,
then, guys.
I do want
Oh
to say
yeah, go ahead.
one last thing. For everyone who is kind of trying to figure out what to invest in and what is a really underrated value. I took a look at a lot of these fast food companies, the McDonald's, Jack in the Box, Wendy's. Yum Brands is one that I just got into earlier. I think like yesterday. I think these companies are really, really undervalued. Like when you look at the actual data as far as their traffic into their businesses before COVID and now, they're actually seeing more traffic from their normal levels pre-COVID. And so I'm wondering why the hell are these stocks down so much? And especially with given the fact that they're going to not only expand in terms of building more locations, but they are they may be, you may see a lot of these fast food companies be totally automated within the next 10 years. And so the fact that interest rates are low, I think it'll give them even more juice to automate even faster, and that will boost their profits up like crazy. So I'm in Yum Brands. I got in yesterday. I like McDonald's. Jack in the Box is also good too, and Wendy's is also a good one. That's just one industry that I would keep an eye on. I think it has a ton of growth potential, and it's trading even now way too low relative to where its core fundamental factors are in terms of how much traffic they're doing and what they can do as far as creating more operating efficiency.
Perfect. Well, we'll wrap it up on that thought, Faisal. Definitely appreciate you joining. Guys, make sure you hit the thumbs up, share our content, and join the free Discord channel. The link is below. Until then, we'll catch y'all Sunday. Have a great rest of your weekend.
Peace.